Good morning from Los Angeles. Alyssa Corman, Ed Carson here with your market update. It is Monday, October 29th. And on today's show, we're taking a look at IBM, Tesla, and two companies issuing their quarterly reports after the close. So checking in on the major indexes today, we are up sharply across the board. The S&P 500 leading the gains, up about 1.6%, and the NASDAQ is up about 1.5%. We're going to take a look at the chart of the NASDAQ here in a second. And the Dow is up 1.3%. So even with the solid gains today, we've been saying lately that even though you may see a bright spot here and there, that you don't want to isolate that one day of action as your signal to get back in.
Yeah, I mean, the market is up right now, but we have no idea where it'll close. We've definitely seen a lot of volatility on both sides. And if you look at the NASDAQ chart, and the stock has really been coming, the chart has really been coming down sharply in October. It hasn't even broken that little trend line, let alone some kind of real performance. When you see a fall today, several days of strong performance and higher volume, and this is just day one, the morning of one day. So let's move on from that before we get too excited.
That's right. Well, we have some M&A news in the tech space. IBM buying Red Hat in a $33.4 billion deal. That's about $190 a share. Red Hat up almost 50% now on the deal. We have IBM stock down about 1.8% right now. It is off of the session low, but IBM trying to bulk up in the cloud computing space. When you're looking at other tech giants like Microsoft and Amazon and Google, it seems like IBM a little bit behind the times, so to speak, when it comes to cloud computing.
Yeah, and they've had struggled. I mean, their revenue has fallen by about a fourth over the last few years, really just quarter after quarter. And their new entry hasn't really, new tech fields haven't done that well. They haven't transformed the way Microsoft has been able to transition into the cloud. And IBM, if you take a look at its stock on a relative strength line, the stock is at a multi-year low. The relative strength line, which is sort of the blue line on that chart, that's actually at a 22-year low. I mean, so like you'd have been better off buying the S&P 500 in 96.
Right.
And it's been in a long downtrend. It's just not very successful. So obviously, it'll be interesting to see how this goes. If that can transform the deal, they're paying a pretty big premium, 63%, to get to bulk up in the cloud.
Exactly. And if you're following along with us live, we are having a little bit of a technical issue with our charts showing up. So feel free to follow along with your own charts at investors.com or MarketSmith or whatever charts you prefer to use. All right, moving on, let's take a look at Tesla. Those shares are up almost 4%. We have the stock continuing to rise after its quarterly report last week. Tesla now building the right side of a base here. It's about 11% off of a high. Is this good for the bulls here who maybe are looking for a base to get back into the stock?
Well, it's certainly been good for the bulls. I mean, obviously, if you've been a long-time holder, I mean, the stock has been struggling for, it's been really up and down, very volatile. That hasn't necessarily changed. I think that bulls and bears both sort of have blinders on. And, one thing is you really should look at the chart. And, I wish the chart was here, but it's like the stock has been really choppy over the last few years, really. But maybe this is the beginning of a turnaround. You don't necessarily have to jump on it. You wait for the stock to prove itself. And, maybe that'll be there. I mean, but there may be other opportunities. In fact, but Tesla's not the only one. A lot of automakers are doing well because China reportedly is mulling a big cut in the tax on buying a car there. And so all the big automakers that have operations there are rallying strongly, which is one reason why the S&P 500 is leading the way today.
All right, well, we will definitely be keeping tabs on Tesla. I'm sure it'll be back in the headlines one way or another.
Absolutely.
All right, and taking a look at two companies that are issuing their quarterly reports after the close tonight, we have Wingstop and Texas Roadhouse. So starting off with Wingstop, it's looking to retake its key 50-day line. Heading into that report, up about 1%, and we have analysts expecting earnings to rise 18%, while sales jump some 46%. So that is pretty notably strong growth.
Yeah, and Wingstop has been great. The stock actually kept on rallying through much of October before finally faltering, coming through its 50-day last week, but it's been doing really well. And there's no real buy point for this stock right now, but it's definitely one to be watching. A lot of restaurants, a lot of retailers that are up on the IBD 50 list right now.
That's right, and we have Texas Roadhouse up about 1.7% heading into its report. It looks like it might be hitting a little bit of resistance at its 50-day line as it builds a base, and we have earnings expected to rise 26%, revenue up 10%, so that would be acceleration here on the bottom line for another restaurant stock.
Yeah, and this stock is in a flat base, setting up. It's a little below the 50-day line, as you say. I mean, keep in mind, it's a stock market correction.
Right.
Earnings are coming up, and they're not at a buy point. So we're not saying these are not stocks to buy, but these are stocks to watch. A lot of things, this is what you should be doing during a correction, is looking for top stocks that are performing well.
That's right, and we have a lot of resources at investors.com for investors to look at stocks to watch. A few columns now. We have IBD 50 growth stocks to watch. We have stock of the day. A lot of our columns are looking at stocks that, like you said, would be good for watch lists right now amid the correction.
That's what we're focused on right now, to be honest.
Exactly. Well, head to investors.com for all the latest market news and analysis and for those stocks to watch. And you can check us out across our social platforms. We are on Facebook, YouTube, Twitter, and Instagram. So thanks for joining us. We will see you back here tomorrow.